What if China has been hiding a financial weapon that could change everything? A weapon so powerful, it could send the US economy into a tailspin. That's right. We're talking about China's $760 billion worth of US Treasury bonds, the financial equivalent of a ticking time bomb. And if China decides to pull the trigger, it could be catastrophic. Let's dive into what we're really looking at here. For years, China has been holding on to massive amounts of US debt, $760 billion to be exact. That's a staggering amount of leverage over the US economy. At one point, China controlled nearly 30% of all foreign-held US debt. Fast forward to today, and China still owns about 8.9% of the total foreign ownership of US treasuries. But here's the kicker. What happens if China suddenly decides to sell all that debt? If China sells off a significant chunk of these bonds, it could trigger an earthquake in the global financial markets. We're talking about skyrocketing US bond yields, which means the US government would face a massive increase in borrowing costs. Imagine the US having to pay much higher interest rates just to fund its daily operations. It would send a ripple effect through the entire global economy. That is the kind of financial damage China could inflict by simply pulling the plug on its US bond holdings. But let's be clear, this isn't just about hurting the US. It's about sending a loud and clear message. China wants to show that it's no longer playing by the rules that the US set. It's saying, we have the power to disrupt your financial system, and we're not afraid to use it. However, let's not sugarcoat this. Selling off US bonds isn't without its risks. China is essentially holding a double-edged sword here. If they start dumping bonds, they could also crash the value of their own reserves. Think of it like a major shareholder dumping their stock in a company. If they sell too much too quickly, the price will plummet and they'll lose a fortune. The same applies here. China could watch its own wealth evaporate if they're not careful. But let's get real. China has already been slowly and methodically moving away from US treasuries for years. They've been buying more gold and diversifying their reserves into other currencies. And this isn't just a coincidence, it's a part of a bigger strategy. China is positioning itself to wean itself off US debt and the dollar. But why? The reason is simple. China wants to reduce its exposure to the US financial system and protect itself from the whims of US economic policy. So what does that mean for the future? Here's where it gets even more alarming. While a massive sell-off might seem like the obvious move, China is more likely to take a slower, more calculated approach. They'll let their bonds mature and not reinvest in new ones. Over time, China's exposure to US debt will shrink without making a huge noise. It's a more subtle move, but don't mistake that for weakness. It's part of a long-term plan to dethrone the US from its position as the world's financial leader. Now let's talk about the bigger picture. The global demand for US Treasury could start to shift permanently. Countries around the world watching this financial tug-of-war might start pulling back from US debt, and if that happens, the US could be in real trouble. If countries like China stop investing in US bonds, the entire US debt market could face a liquidity crisis. This isn't some far-off possibility, it's a real threat that we need to be talking about right now. And this brings us to the most frightening part. China's move to diversify its reserves and reduce reliance on US bonds is not just a strategy, it's a message. It's a statement that China is ready for a world where the US dollar is no longer the dominant currency. This is about the future of global finance, and China is playing for keeps. Their ultimate goal? To shift the global balance of power away from the US and towards China. Let's be clear, this is not just a trade war. It's a battle for global financial supremacy. Will China make a dramatic move and sell US bonds? Maybe, but even if they don't, their quiet exit from the US bond market could have the same effect. The US needs to understand that China isn't just playing for short-term gain, it's playing for long-term dominance. So, what does this all mean for you and me? The world is changing, and the US is no longer in control of the financial game. If China continues to execute its strategy, it could lead to a massive shift in global economic power, and the US might find itself fighting for its position at the top. The question is, how long can the US keep its grip on the financial world before China pulls the rug out from under it? Stay tuned, because this financial battle is just getting started.